We've got a tight coil. Is there a big move coming? And FOMC could be the trigger. So sometimes doing nothing is the best trade that you can make. And while I was enjoying my long weekend on Monday, the S&P did rally in through the bullish triggers, but Tuesday slapped back straight into the range. And as we come into Wednesday, we've got this FOMC meeting later in the day, and the fact that we're not really doing anything is probably an indication that we could see something explosive on the shenanigans and the circus that we call the FOMC later today. So let's take a look at the charts. Remember to stay tuned right to the end for a fun stock market fact. As we come into today's session, again, we got the Monday breakouts, we got the Tuesday break back in, and pretty much we're in this tight consolidation now. So we're really back inside where we were previously. So all we can presume is, there we go. I don't know what's going on with my drawing widgets. There we go. Let's try it. There we go. Perfect. All we can presume is that until something new happens, the same thing's going to continue. So we attempted something new on that breakout. We've retreated back inside this consolidation, and we've got to resort back to, we're going to go from the range highs to range lows to range highs, and we're going to stay in that consolidation. So until something new, well, not necessarily something new, but we've retreated back to the old thing, and that's going to continue. The same plan of action is what I'm looking at, which is, again, if we have the breakout pullback above 57.05, then I'll be looking for my bullish entries. Managed to avoid an early entry on Monday, as I mentioned, and we've got the bear situation here. A little bit of a bear flag going back inside the range. We could go from the range highs down to the range lows, which would be quite nice indeed. And then we can assess as to whether we're going to see a reversal off the range lows or a breakout through the range lows again. We'll have that in a future update. So that's where we're at for the moment. It's the same plan. It's bullish or bearish, waiting for the triggers. And again, I'm not going to be too eager to jump in ahead of the circus later today, so I'll probably just let the day unfold and see where our trade triggers lay. Here's a fun stock market fact. Did you know the longest FOMC meeting in history lasted 5 days in 1932 during the Great Depression? Traders were left in limbo, staring at their tickers, waiting for an answer that took 120 hours to arrive. Now, waiting for clarity isn't anything new. It's just that today we get our pain in hours and not days or weeks. So stick to the plan, wait for your triggers, and wait for the circus to finish before you place your trades. If you'd like to learn more about my proven income trading system without having to stare at the chart all day, click the link next to this video and you'll be taken to a free training that I recently held where I outline one of my favorite money-making patterns. So click the link and I will see you over there.